Do you want to create a passive income machine that you can set up and monitor in less than 1 hour per week? Here's the option strategy to get it done, plus an easy hack to see your winning percentage before you make your trade. Of course, I'm talking about selling naked puts for passive income. When you sell a put contract, what you are doing is agreeing to potentially buy 100 shares of stock from the buyer of the options contract. And as the seller, you are getting paid to take on that risk of having to buy shares. This means two things for you. Number one, you're getting paid premium or cash up front to sell this options contract. Number two, you take on the risk of having to potentially buy 100 shares of stock for each single contract that you sell. Let's look at an example using the stock Micron and show you numbers in a spreadsheet to hopefully make it make more sense. To populate our spreadsheet properly, we need to pick up a couple pieces of information from Interactive Brokers. Number one, MU is our ticker over here. We want to get the stock price 65.56. We also want to look at the 30-day-ish options chain and look at the put side here, selling our put below the current stock price of 65.56. Let's target around that $63 range. That's our strike price, our expiration, and the stock price. Now we're good to flip into our spreadsheet and break it all down for you. So the stock ticker MU, again, is for Micron, and they're a semiconductor company. The current price, 65.56. And I've got some preloaded things in here that I'm going to calculate once we fill in the strike price. We said $63 is our strike price, again, below the 65.56. And we also need the biggest kind of most important thing here is the premium. This is the money that you're going to get paid. Let's go double check that one more time in Interactive Brokers. And the premium is just the midpoint between the bid and ask for the $63 put. So let's call this $2.11. So what we're agreeing to do, again, as we sell this put option, is to buy potentially 100 shares of Micron MU at $63 per share, which is $2.56 less than the current stock price right now. We get paid $211 to sell this contract, or $211, right? It's 100 times 2.11. That's the math right there. And this capital thing is important as well, because that's the amount of capital we have to put up in our own account to actually make this trade. So when you're doing this, you need to have that cash in your account. This is critically important. If you don't have it in your account or using margin, you can get yourself in a lot of trouble very quickly. But assuming we have $300 in our account as capital in case we have to buy 100 shares, we are good to execute. We're going to open this trade here today, and the expiration is actually going to change from the 21st of July to the 28th based on our expiration date. Interactive Brokers giving us 32 days till expiration. Now, here's where it gets super interesting. We get $211. If we divide that $211 by 6,300, you get a 3.35% return on your investment. So you put up 6,300, you get 211 back. 3%, not great, right? Inflation, the stock market average, dividends, maybe you're doing some other kind of investing. It's not that great, but you can do this trade almost 12 times a year potentially, giving us an annual return of around 38.2%. That's what gets it crazy aggressive. That's what the passive income gets super interesting. 38% for the year in a perfect world with this strategy, selling naked puts. Critics are going to say that you have to have too much capital in the game. Critics are going to say that it takes too long to execute. Critics are going to say that eventually you're going to get assigned this shares of stock, and you will. But you also have a secret hack at the end of this video that I'm going to show you how to understand your winning percentage before making this trade to hopefully reduce the amount of times that you actually have to buy these shares. Selling put options can be done in less than 10 minutes per day if you really want to go super simple. And it's basically just have the money in your account. Don't go overboard, don't overspend, and then just target companies you want to own anyway. If you don't want to own MU, don't sell a put and potentially have to buy shares of MU. It's not a place you want to be. If you want to do something else, look at another example here. Let's go back and see another company. So let's look at an example now with C Limited. Current stock price, $56.99. Let's call it 57 for shits and giggles. 32 days to expiration. Strike price, let's go back out a little bit more in time and look at the $52 strike price there. We'll take the difference between the bid and ask. Let's take that around 1.12, and let's go and put it in our spreadsheet. So SE, current price, we said 57 to keep it easy. Strike price, we said 53. And premium, we said 1.12. So capital for this trade, again, is $5,300, a little less than the last one based on the strike price. It's 53 times 100 shares, which you would have to buy if the stock price of SE drops below $53 by the expiry date of July 28th. 30 days to expiration again, and you have a 2.11% return, annualized 24% return. So if you can generate these kind of returns and this kind of monthly premium, just think about if you had a little bit extra capital in your account. This is only with just over $11,000, $11,600 in your account. You're making $323 in your total account for the month. That's a pretty good return on your income. And this is how you can grow your investment account using passive income strategies like selling options contracts. Yes, it comes with potential downside of having to buy these shares if the stock price declines, which it does. It ebbs and flows, and it does come down sometimes. But to reduce the chance of this happening, you can do this. Flip back over into Interactive Brokers, and you can see the percentage chance when you make this trade of having to buy shares at this moment in time. So what I'm talking about, all you need to know, if you know anything at all, take away from this, is that the delta right here, put the delta on, and the delta is the percentage chance right now in this moment in time of having to buy shares if it goes below $53 per share. So it's saying that SE's current stock price at $56.99, there is a 26.6% chance, look at that as a percentage, 26.6% chance right now in time that it's going to drop below 53, meaning there is a 26.6% chance you're going to have to buy 100 shares of C Limited. So I can even put another tab here on my chart and go percentage of winning. And if there's a 26.6% chance of losing this trade, if I just go equals 1 minus 0.266, it means there's a 73.4% chance of winning this trade. And winning means not having to buy any shares of stock, keeping that premium and using it to kind of offset future purchases if I want to, going ahead and repeating that trade over and over and over again. If I can do it almost 12 times in the year, I hit my 24% return on this trade. Let's check out the MU kind of percentage of winning here. MU, Micron, or the Marvel Universe, if you're Marvel fans, my favorite movie of all time. Iron Man 1, the classic, let's get it. We're going in here looking at the $63 strike price, that's correct. And our delta here is 34.6% chance of being assigned shares in this moment in time. It could change in the future if the stock price declines sharply. But for now, at this time, the secret hack for you is 34.6%. Let's put that in the spreadsheet, 36.4. We want to actually go equals 1 minus 0.364, which is just 36.4 in the percentage format. We have a percentage chance of winning of 63.6%. So we get more return, a better annual return in this trade, but our winning percentages go down, our winning percentages go up. In the second example, we make less money. So there becomes the choice for you, the choice on what to trade on. Always you want to look at your winning percentage, look at the delta, understand how much premium, how much capital, your expiration date as well, and your percentage return compared to your annual total. If you have a goal, this is a great way to check this goal with the annual return on the calculation there. Plus, always remember, sell puts only on companies you want to own. That is the key rule here. If you don't want to own it for a day, don't sell the put on it because you might get assigned 100 shares of it and have to hold and be pissed off. 1 hour a week, 10 minutes a day. That's all it takes. You can do this mobilely, Interactive Brokers desktop, quick and easy. If you want to learn how to set up your account in Interactive Brokers for options trading like this, check out this next video in this series. My name is Andrew. Thank you so much for being here. If you got some value out of this video today, please consider subscribing to the channel and keeping tuned in for more. Thank you so much. Catch you on the next one.